Hello, welcome to FountainFX on Friday the 15th of May 2015. Busy week, however, how is it that you can make profit? It's obviously very easy to make profit in a trending market. If you can see here, price has actually trended. It opened low and it's closed high this past week. And we can see that price in terms of momentum, etc., is pushing up. But if we look at previous week, if we see where price opened and then closed, we can see that that week it was very much range bound. So how do we, one, measure the difference between range bound and trending? How do we know when something's trending or not? And how do we therefore adjust our style of trading accordingly? Well, the easiest thing is actually to look at key areas of support, like here at the low, which is the 111.40, and key areas of resistance, which if we go backwards, I think to this area, if we just click back, you can see a key area of resistance there, where price got into it and used it as resistance and then support. And also then with that, we've also then got trend lines, so we can use trend lines. But what's the easiest way or the best way of actually measuring direction and momentum and the kind of trades that we should be taking? It's about looking at higher lows and higher highs, or lower lows and lower highs. And sometimes even when we're range bound, we can see this range bound, and therefore we can see, look, price pushed up from here, broke above the previous high, okay, at the start of the week, and then has used it as a floor. So if price gets back down to it, the higher probability is we should be buying at that point. Also, we've got this trend line as well, so we've got confluence. We've got confluence of this trend line, we've got confluence of the support trend line, if you might as well call it that, or the resistance line. We've got overwhelming direction from a bigger picture perspective. At this point here, we've got it that the actual MACD, even at this point, is saying it's shorting, it's selling. However, we then get the crossover at this point, and that's confirmation that price wants to go up. So there's various factors in which we can use. We can use the MACD, we can use the RSI in terms of indicators, we can use support and resistance, we can use trend lines, we can use candlestick patterns. Okay, so we've got dojis, we've got spinning tops, hammers, shooting stars, bearish and bullish engulfing candlestick patterns, and we also then have also the momentum, so you can see where price is busting through particular levels of resistance or support with momentum, and then there are key areas where we should be looking for potential trades to be taken from. And that's really it. You culminate, you put everything together in order to be able to take trades. If, as happened on Thursday and then also Friday, we look here, this was Friday morning, this was Thursday, there was an element of ranging, price whipping up and down. If you can't take an opportunity or spot an opportunity in the higher time frames, then maybe you should look down into the lower time frames. And I'll just show you exactly what happened Friday morning. Friday morning was here. This was the European Open. Price rallied up with momentum up towards what was previously resistance based on the Asian session. So we got a high here, and we then had price spike through. But then the spike through came back, so it created like a shooting star pattern. Now that started to sell off, so that was the key indicator. That's two. So we've got resistance, and we've got a reversal candlestick, strong reversal candlestick. What was the second one? Well, at that time, MACD was very much overbought, so yeah, it's starting to roll over. It was only probably really until this candlestick here, which is this big one, that it started to confirm that price was starting to sell off. So how could we have entered this sell-off sooner rather than later? Well, the obvious one is price is up here at extremes. Did it get back up to it? Well, it came back up with this candlestick. It came back up and almost touched it, but couldn't maintain it. And it's another selling candlestick, long wick at the top. So that's giving us a nice confirmation to say, look, we've had this huge momentum upwards, very much buying momentum, bullish momentum, and it's literally stopped. So if this was going to carry on, we would expect a pullback and then a continuation. We're not getting that continuation. It's not breaking through resistance. Resistance is holding. So by looking at the candlesticks, by looking at the supposed breakthrough that failed as a breakthrough and continued to sell at that point, and that we are at resistance, then it's a great place in which to sell at. So a close of that candlestick, okay, or this candlestick here, which shows that price couldn't get up there, we have a sell at the 114.10, and our stop was right above that at the 114.21. So we're talking 11-12 pips of risk on that. And where's the target? Down here at what was support, which is the 113.73. You might want to raise that 113.75 just to make sure you get filled. And price comes down, pulls back, and breaks straight through there. It actually pushes through that level. But the reality is that that's a target based on previous price action. That's where you take it from. So we end up with the price moving, basically moves 35 points for a 12-point risk. So that's 3-1 basically. And that's a simple way of trading. That's it for the week. Hopefully you'll find that helpful and that useful to be able to spot these things. And happy trading. We will catch you next week. Bye-bye.